Listeners, let's just get right into it today. I am sitting here with Zach Lemaster. And Zach, I want to ask you, tell me something that you believe about turnkey investing that might surprise us.
Contrary to popular belief, Jonathan, turnkey properties can be purchased with as little as 5% down, and you can actually burr turnkey rentals to get 100% of your capital back out of them and still have a good investment that has immediate equity, which I think is a rare thing. Most people don't are not aware of that.
That's true. That's surprising to me. I don't typically think of turnkey investing as an equity play. So I'd be super interested to learn more about that. But first, let's get to the intros. Listeners, welcome. Thank you for being here. You are listening to The Source of Commercial Real Estate, where we talk to the experts in commercial real estate so you can grow your business, find a competitive advantage, and use real estate to live the life that you want. I am your host, Jonathan Hayek, and I'm a former public school teacher who found financial freedom through residential real estate investing, and now I invest in commercial properties, particularly small industrial. And today I'm talking with Zach Lemaster. He's the founder and CEO of Rent to Retirement, the nation's leading turnkey investment company. You have almost certainly heard of Rent to Retirement. Zach is a seasoned real estate investor and licensed broker that has accumulated a large portfolio of rental properties across multiple markets, including single family, multifamily, commercial, and new construction. Zach is also a licensed optometrist who practices on a volunteer basis. Zach started investing in real estate while working as an optometrist and captain for the U.S. Air Force. This eventually allowed him to retire early from his career in medicine to be a professional investor by strategically investing in markets that maximize cash flow, appreciation, and equity. Zach went on to build a successful wholesaling, flipping, and management business, working across multiple markets, which led to the foundation for Rent to Retirement. He is considered an industry expert in real estate market analytics. Zach has been published across many exceptional national platforms, including Forbes, USA Today, Fox News, NBC, CBS, Veterans Affairs, Think Reality, and Inc. 5000, and now the Source of Commercial Real Estate. He is passionate about educating others on the numerous benefits of real estate investing, how to use real estate as a means to create the lifestyle each person desires for their family. Zach, thank you for being here. How are you doing today?
Hey, Jonathan, doing well. Thanks so much for such a great intro with all my talking about all my accolades and really building me up. But I'm doing awesome, man. It was cool to kind of connect prior to the show, talking about our background. But yeah, I'm excited to be here. Thanks for having me on.
It's a thrill to talk with you because I know I've heard you on Bigger Pockets before, and I've seen Rent to Retirement's name all over the place. And you have built a really impressive business, which I'm really excited to hear about. I think from the ground up. And yeah, why don't we start, Zach, with you telling us a little more about your background, how you got started in real estate, and what your work looks like today?
Yeah, I'd be happy to. It's been an evolution, just as you mentioned, having the history as a school teacher. I think a lot of us that find ourselves successful in real estate and do this full time didn't necessarily start here or think that we were going down this path, but here we are. And that was certainly the case for myself and our family. So my wife and I are optometrists by education. We went to school in Oregon. I was on scholarship for the Air Force, so I was a captain in the Air Force, as you mentioned, in practice for multiple years. That's where I started investing in rental real estate. First house I bought was a duplex, lived in half, rented out the other half, and kind of house hacked it before that was a commonly known term. But I just kind of fell in love with real estate. It was very tangible to me. It was very simple as well. So, I could kind of run the math easily and see how I could reproduce this. And so after that first, and this is probably about 15 years ago, we bought that first duplex, but we continued to buy more and more real estate, Jonathan. But we hit this pivotal moment that really changed the trajectory of our lives and my wife and I, it really changed the trajectory of our business and our lives in general. And this is where we found, or basically opened up our mind to investing in other markets outside of where we were locally living. Now, we started local because that's what we knew. That's what we felt comfortable with, as many people do. And there's certainly nothing wrong with that. But we were able to, once we started to build systems around investing nationwide, we were able to tap into a diversity of different markets that had better returns, equity positions, that had stronger growth potential than our local markets, had more affordability. And that allowed us to scale very quickly that we would not have been able to do in our local market, and ultimately allowed us to retire early in life from our career paths as optometrists. We moved out to Denver after I exited the Air Force, and we did work in private practice here for a short period of time, but we were investing in real estate this entire time. I have not taken a year off of buying real estate for 15 years. I've been investing, every single year, regardless of what's going on in the market, interest rates, climate, whatever. So that's kind of our personal story. But once we were able to kind of replace our active income through real estate, that caught a lot of people's attention, and they were saying, hey, how can we invest with you? Can you teach us how you were doing this? We don't have a lot of time or knowledge. Like, can you help us basically invest in real estate, doing the same thing that you were doing and leveraging your knowledge? And that was really the birthplace of Rent to Retirement, is assisting other investors to do the same thing we did, which is access the best investments across the country and buy those without having to buy yourself another job, because we already have teams and systems in place to handle all of those. So fast forward to where we're at today. Rent to Retirement is a nationwide company. We really focus on 12 or 13 main markets, Midwest and Southeast. We do a lot of new construction, but we sell properties that are newly built, leased, and professionally managed, allowing our investors to access the best deals across the country where they can successfully build a portfolio and scale without having to do all the groundwork. We do all that for them. We do focus on residential. That's mainly single family and small multi, but yeah, it's been a journey. We did over 1,000 doors last year. So that's a little fast forward to where we're at today.
Will you go back in your story a little bit? You were, I presume, a high earning doctor and you still hold your license. Will you explain a little bit more about your transition from being a doctor to full time real estate investing? That is not a story that we hear very often. So, will you shed some light on maybe some of the what inspired you, if there were inflection points in that journey?
Certainly, it's interesting, and it's been an evolution over time. It was never. Sometimes I'll have people that approach me and say, like, and now they'll say, "Well, I'm glad that you realized that you didn't enjoy optometry, or you found your passion, or like, you realized that wasn't the right fit for you." And I always correct them, because that was never the case. I very much enjoyed what I did. I spent $400,000 in 8 years of my life going to professional school to get the degree, and it's like it was a hard thing, like emotionally, moving away from that. But I always enjoyed eye care, and I still do. I mean, the day to day of dealing with insurance companies and all that jazz, like I don't miss that, but helping people see, I certainly love that. But now we're able to help people on a national scale. We have humanitarian and volunteer efforts, nationally, and we're able to have actually a broader scope within eye care beyond what we could do just as a practitioner. But yeah, it was an interesting transition. I mean, we never got into real estate thinking we were going to replace our income. I mean, there's a lot of people today online talking about how you can do that, right? Leave your job through real estate investing. And certainly that's possible, but it doesn't happen overnight. So we started investing because we liked real estate, and we just kept going. But we got to the point as we were scaling and being more intentional on where we were investing that we started to actually earn more income from our portfolio. So I transitioned very slowly out of the eye care world. I cut back from, well, at one point I was working 7 days a week when I was very young, but I cut back from 5 to 4 to 3 to 2, and then I was like occasionally fill in, and I was like, you know what, I'm just going to do this on a volunteer basis and not really, focus on this as a source of income. But there was a lot of people. I mean, my mother-in-law included. Early on, they're like, "What are you doing? You have this professional degree," and she thought, it was the worst thing in the world to you leave that safe job, right, and go down this path. But I mean, it's just I've realized over time, Jonathan. I think you could share the same thought with me. I'm interested to hear your opinion here, but real estate has just been over time, man. It's just been eye opening to being able to live a lifestyle beyond what we would have been able to have the freedom, right? This is something we all talk about, financial freedom, but like I will always be a busy person. I retired a while ago, but I've just been able to have an impact on more people's lives and just do more through real estate and create generational wealth. And that's what's exciting to me. And that's possible for anyone, but it just takes dedication and time. So, I mean, that was a little bit of our evolution. I'm curious to hear about your own process and changing out of the typical job.
Yeah, thanks for asking. It was just exactly what you just mentioned. It was about freedom for me. Um, similar to you, it wasn't that I didn't like teaching, or I was anxious to get out of it, but it didn't provide the freedom that I was looking for. So my wife and now my kids, we really value time freedom and the flexibility that real estate provides, and so I still do deals because I like doing deals, and I don't know that I'm set for life at this point, but I have a really good foundation, and I have enough real estate that it funds my day to day, and we can travel, and we can work from different places, and we can do fun things that having that W-2 job just doesn't allow you to do. And so for me, it was just all about freedom and all the different types of freedom that real estate provides. Yeah.
Absolutely.
So, Zach, I would like to learn more about rent to retirement and then frame the rest of the conversation in terms of kind of the lessons in real estate investing and growing a business that we can glean from your experience in building rent to retirement. So, will you tell us sort of what rent to retirement is? You talked about doing 1,000 doors last year, which no matter what kind of real estate you're doing, that is a lot. So tell us what rent to retirement is. And if you could also maybe frame it as taking it full cycle in terms of how you acquire properties, what you do to the properties, how you dispo the properties, whether or not you continue to manage them after you dispo them. Sort of take us through the life cycle of rent to retirement deals.
Be happy to. And so, just fundamentally, I mean, we work in the turnkey space of real estate. That's a huge buzzword, though, right? And I always want to be intentional because I feel like we work in a very niche area of turnkey. I think I personally feel we're more in the build to rent space than anything and development space. But what we offer to our clients, our mission statement is to make the best deals across the country accessible to everyone and allow any investor, regardless of your experience, the ability to start investing, to diversify and scale your portfolio, tapping into our immediate systems. We're handling everything for you, so you're not having to try to manage and build your own team, across 10 different markets. Like we have the opportunity for you to easily come in and tap into these areas. And certainly we want to talk about some of the creative things that you asked me to intro with about that are like, not in the non-traditional way of turnkey investing. You can come in and have immediate equity. It all depends on your goals. You can have an area that has cash flow and appreciation. Contrary to popular belief, we have unique financing options for people. We have seller finance. We have options where you can buy, with as little as 5% down on multiple properties. We're not talking about live-in flips. They're live-in, FHA loans. These are like true investment loans. We help people build a tax strategy as well. This is the same thing. These are all things that we do personally, right? We try to buy enough real estate every single year to offset our active income and actually create a loss that allows us to have more money to reinvest. These are just some of the things that we do for our investors. We don't just sell them a brand new built house with a tenant and then manage it for them. We help them build an investment strategy and plan. And as you mentioned in the beginning, and same for myself, we started investing in residential, single family, small multifamily. I will always hold a large portion of my portfolio in residential because I think it's very predictable. You're investing in a human necessity. We have an undersupply of 7.2 million homes in the U.S. and there's a ton of demand and undersupply, especially in the markets we focus on, and we want to serve those people. But those are also safe areas to invest. But over time, we started to evolve our own portfolio. What we own a lot of now is commercial retail centers here on the Front Range. We can talk about potentially some of those. Those may be interesting to your audience, but to not be too long-winded to answer your question, really our path, like the path we follow, Jonathan, is we start on a macroeconomic scale. We want to look at areas that have things like landlord-friendly legislation, low taxes. We want to be in areas that are below the median house price point. So right now, that's like $408,000 in the U.S. We want to be in areas that are well below that, so we have the largest demographic of tenants and possible homeowners when it comes time to liquidate that property. We want to be in areas where you have high rental demand and rental rates relative to home prices, diversity of industries, not an area that's just relying on oil or gas. Anyways, I could go on and on. We focus macro area, mainly Midwest, Southeast. There is this population shift down to the Southeast, but there's certainly some really good areas in the Midwest as well that are still affordable and growing. We go into these areas and we build our teams. This is often, we build a comprehensive team in this area, and it could be either building our own team from the ground up or partnering with local people that already exist. We do a lot of internal construction ourselves. Like we're the developer and build the house and then sell it to our investor. But a lot of also what we do in markets where we don't have established teams is we partner with builders. We were the largest buyer of DR Horton homes last year, and we
Wow.
we're able to come in and negotiate wholesale deals because we're a volume play, and then our investors get access to those deals below market value, where they can have an immediate equity standpoint, and then we still have the managerial teams that will facilitate management in those areas. So the goal is to first identify markets that fit our overall criteria, build the teams and systems in those areas. We invest personally in these areas and build our own portfolio. And once we're confident about the market and the process, then we'll start bringing those to our marketplace, to our community of investors to access consistent off-market deals. Average price points, $300,000 and below for a single-family brand new built house, A-class area. We have some short-term and some mid-term rentals as well. So let me stop there before I ramble on too much.
Yeah, no, that's great. It's really impressive, and I know. I think I first heard your story. It has to be at least 5 years ago, from Bigger Pockets, and it sounds like your business has just continued to evolve with the markets. Hearing you talk about short and medium term rentals, and that's an evolution that's really taken off over the last several years. I'd love to get into some of the lessons that you've taken away from your investing journey personally, and also from building rent to retirement. So, I want to first start off with investing long distance. I personally have started investing long distance over the last few years, but I know it's a fear for a lot of people. So, can you talk about maybe some of the fears that people have in investing long distance? Because I imagine your business is largely built on investors from all over the country investing in the markets in which you work. So, talk about the fears that people have from investing in out of state or long distance, and how they overcome those fears, and some lessons for people in investing long distance.
Oh man, so much here to unpack, Jonathan. So I think this, and if you recall to my initial story, I mean this is actually probably the most important thing that my wife and I did that changed the outcome of our business, of our lives. Really, is to learn how to invest from a distance. Now, it was not an easy start, because you don't have visibility over things that you might locally, but that could also be a hindrance. I think a lot of people, that it seems daunting and overwhelming once they start to think about the idea of investing out of state. It seems risky and complicated, but it doesn't have to be, right? So, I mean, you do need your system. What I would encourage people to look at it as I mean, investing is investing. Um, Location is somewhat irrelevant because you need all the same processes and systems in place. Now, if you're someone who's just getting started and you're self-managing your properties, I mean, that's one thing. But if you're looking to scale a portfolio and make this a business, which I think you should approach it as, because this is a business, you need to have your business operators, right? You need all the key components in building a successful rental business, regardless of where the property is located. If it's next door in your local market, an hour away, 1,000 hours away, it doesn't matter. You need all the key components. You need, good property management, good software in place. You need to have your maintenance teams if management doesn't have those, the right lenders, the right attorneys and CPAs to make sure that you're doing things appropriately for the state, that you have your legal entity set up appropriately. These are all obviously things we help people with, but I would say that don't get in your own way and believe that investing from a distance is a limiting factor just because it seems daunting. Once you open up your mind to investing across the nation, then like the nation becomes your market. And as there's emerging markets or new opportunities that you don't have access to, say in your local market, then I mean that can really allow you to have a competitive edge and be a more successful investor. That was definitely the case for us. But you just need a process, right? You just need a process to follow. And when my wife and I first started investing out of state, like it was school of hard knocks. We lost a lot of money. We sometimes you got to go through 10 bad property managers or contractors to find a good one. And that's just the case of business. But we first started by identifying areas that we knew there were growth patterns. We connected with local brokers. We started to build our teams, and then we trialed those teams. Some teams worked out very, very well. Some did not, and then we replaced them, but we just never stopped. So, I think investing out of state can be extremely powerful. And I think it's, you just follow the same process of it, as if it was locally. Sometimes it seems like the hardest obstacle is to identify a market to start with, right? Because if you start thinking about investing out of state, all of a sudden the U.S. becomes your playground. It's like, well, there's 1,000 different markets out there. Where should I even start? And I think that's good to really. My advice for someone is to be realistic with what your goals are and what you're trying to accomplish, and then reverse engineer that to identify the market. If you want to have more cash flow, that's one thing. If your purchase price is, say, you need to be at $300,000 or under, that's going to limit and shape the markets that you want to focus on. If you want to be extremely growth heavy, those are different markets. So I would say that early on we just learned the hard way, but we didn't let that stop or deter us. We just tried to always improve, find better people, build better systems, and just kept going.
Are there, well, let me rephrase that. What are the top mistakes that you see people making when investing out of state, or some of the top mistakes that you have made when investing out of state or long distance? And how do you overcome those mistakes?
Yeah, shoot. We jumping in too early was one thing we made a mistake on, right? Like partnering with people, and this is at every layer of our business growth. Like I could talk about an issue with partnerships, and not dating before we married them, and actually like vetting partners. It's important to start slow, develop a track record with someone. You can vet someone to the nth degree and do all this, but like until you have firsthand experience, like sometimes you just don't know. But you need to get that firsthand experience too. Like, if you don't do anything because you have a fear of not taking action and losing money potentially, then you won't accomplish anything. So you do just need to get over that. But some of the common mistakes that we see investors when they start to think about investing out of state, the first thing is that they are too emotionally involved. It's like, look at this as a numbers game. Like if you live in LA or New York or whatever the case is, it is it is a hard concept to wrap your head around, like why someone would live in the Midwest or the Southeast in some of these smaller areas. And it's like, why would you ever invest in there, let alone live there? It's um, but you just need to understand, that the U.S. is a very diverse place, and there is different geographies that have, different type of tenant demographics and income demographics and lifestyles and affordability, and so just be conscious of that. Remove the emotions, make it an analytical decision. We see sometimes investors they don't look at the long term play. So many people look at a year like a pro forma, and this is true with commercial real estate. We were just buying a deal the other day that it's like their offering memorandum, their own, was like off by $100,000 on their projections for their triple net, and not all the leases for triple net. It's like, anyway, let me not get sidetracked on that. They look at the pro forma and they just look at year one analysis, and they don't forward project where they're going to be. I mean, real estate, and you know this, Jonathan, but real estate, what's powerful about it is actually not so much the cash flow that can be powerful over time, but it's all the other things that you build wealth in real estate through. We talk about real estate being the ideal investment. And that's an acronym for all the ways you build wealth. So I is income, and that's cash flow. Most people, newer investors, they just look at a cash on cash return and just focus on that. But the reality is, it's like all the other things are how you build wealth. So D is depreciation, tax benefits. E is equity that you're building up as a tenant pays a loan down. A is appreciation, and L is leverage. Being able to use leverage and scale your portfolio that you can't do in any other asset class. But it's like we've learned over time, cash flow should support the investment, but it's all the other areas that allow you to truly build wealth, like the tax benefits and being in growing areas that appreciate. You can't see that and conceptualize that on year one, but it's really important on what locations you're focusing on, and that's what builds wealth dramatically over time. So I guess my point here is, don't be so hyper focused on just a pro forma, looking at the cash flow year one, making an investment decision based on that. Spend the time to understand and run the numbers for all those components, not only year one, but long term, because that can actually change your strategy. Like our strategy to invest right now, we buy a lot of assets. We take our active business income and we buy a lot of commercial retail centers that are 10-year triple net lease properties, brand new construction, that we can run cost segregation on and offset our active income. And we're buying those at 4 or 5 caps. the cash flow sucks on those, right? It's like hard to cash flow on them, but it's a tax play, and that's because we understand the long term play on our goals. We also buy a lot of residential properties that cash flow great, but we don't necessarily look at those as a long term path. So I don't know. Without rambling too much, those are just some of the mistakes we've made or we've seen investors make. But at the end of the day, you just have to build a strategy and plan. You got to execute it, right? And then when things don't go according to plan, you alter the plan and then you keep going.
Yeah, Zach, I don't know if you feel this way. I can certainly, it's true for myself that over the last few years, real estate has been so good to investors. And I think a lot of investors got caught in the trap of short term thinking, where we could buy something and in some cases not do a single thing to the property, in 2020, 2021, not do a single thing to the property and sell it for an incredible gain 6 months later. And what we're learning now is that's not real estate investing. That was not a normal market. That was an anomaly. And that was short term thinking. And lots of people made great money over the last few years. But we are now back into maybe more of a normal market, more of a balanced market. And I think you hit on a great concept of real estate is a long term play. And the benefits of of real estate come from a long term strategy. So, not just the year one pro forma. As much as we all want that cash flow, there are so many other benefits to real estate investing, and they're not all going to come in year one. And so you're going to get some great deals where you have some great gains on year one, but really the play in real estate is long term. And so, Zach, I'd love to transition. You touched earlier on markets and helping people identify markets that are going to be great places to invest. And so, talk about some markets that you personally are excited about and the markets that rent to retirement is investing in right now.
We have two main geographic areas that we focus on. This would be Midwest. These are areas like, Cleveland, Ohio, multiple areas in Ohio, Indiana, Missouri. And those are your bread and butter, $150,000 B class house. That's just, they might produce a 10 or 12% cash on cash return, even year one, but they're probably not going to be super growth heavy long term. Those are your bread and butter, workforce housing that make great investments. And they're very accessible based on the affordability of them. I mean, you could come in and buy multiple of them for what you could put a down payment on in some parts of the country, right? So that's a big portion of what we do. Probably more so what we do, about 70% is build to rent new construction in the Southeast. And this is where I'm a little bit more bullish just because of where the supply and demand discrepancy is. And it's not getting any better, meaning there's more and more demand for housing that all the builders combined can't provide supply for. We like to focus on areas where there's strong population and economic growth. That's a lot of that is Southeast. That's where you get double digit appreciation both in rents and home prices, home values over time. And we're seeing that year to year, even now, where the rest of the country may have seen some fluctuation in rents and prices. But we like Texas, specifically around Houston and San Antonio. We do very well there with short and midterm rentals as well as some long-term rentals, and we have some small multifamily. Excellent areas. Property taxes aren't so great in Texas, but again, it's just an input data point. If your rents compensate for that and you have the growth, then it makes sense. We also like Alabama. Alabama and Florida are probably the markets we're the most heavy in. Areas surrounding Huntsville. One thing that we do is we focus on what we would call secondary markets, and I think these are kind of these emerging markets and these areas where there's an immense amount of opportunity right now. Because what we found in large metropolitan areas, like there's an affordability issue, largely in part due to what you just explained, Jonathan, with home prices going up very quickly, during this post-COVID time period where it's just like appreciation everywhere, both in rents and home prices, and like there's an affordability. We ran a study the other day that looked at the affordability crisis in the U.S. and there are like it's like 80% or something of home prices in the U.S. Are, I'm sorry, I overstated that. It was around 65% are $500,000 or over. The average affordability for the average household is like $270,000 if for the average American household to buy a property. Only 15% of the homes for sale in the U.S. are within the affordability range. So there's a huge affordability issue that's probably not surprising to your audience. But my point is that in some of these secondary markets where prices have gotten so crazy expensive, I'll use an example in Orlando. We try to be in areas that are 30 to 60 miles suburb or commutable in a smaller community where they are still seeing strong growth because people are moving to those areas specifically for affordability, but they're still accessible to a large metro area and still can have that bleed off population growth. So, for example, we work a lot in an area called Poinciana or Haines. It's in Polk County. It's southwest of Orlando. We can build a brand new construction house, a 200 or 2,000 square foot home for roughly 300 to 320,000. That's going to rent out at $2,500 or $2,600 a month. Cash flows all day long. Even putting just 20% down. That same house in Orlando will be like $800,000 and rent for maybe 3,200, right? So it's just you get a much better value investing in some of these secondary markets. So we're doing that in a lot of these areas. Huntsville, Alabama is another area. There's NASA and tech and all these things, government in Huntsville, and it's just blowing up, Boeing. But there's an affordability issue. So we work in an area called Harvest, which is just outside of Huntsville, where you can same story. There's high rental demand, great schools, A-class location, but you can actually be strategic to buy a more affordable house that I think is positioned for growth long term. You have a higher, larger runway based on the price point, and it does cash flow well. So we like Southwest Florida, Central Florida, Alabama. We do usually between Birmingham and Huntsville. We do quite a bit, and we also like the coast, like Gulf Shores, Mobile, Bay Minette. South Alabama, lots of opportunity in those areas in the Panhandle, both for long and short-term rentals. I would say those are some of our most active markets where we see the best opportunity.
Zach, I want to get some lessons from you as you've built Rent to Retirement. There are people listening that are trying to build a business, and maybe they're interested in turnkey investing, maybe they're not, but they are almost certainly trying to build their real estate business. So think back to the early days of Rent to Retirement and where you are now. What are some of your top lessons that you've taken away from building the business to what it is now?
Man, it's always an evolution. I mean, business in general, and this is I view real estate as a business, and you should approach it that way. And I mentioned that early on, but I would say it really depends what you're looking to do. If you're looking to build a passive business where you're owning portfolio, you're an active investor, that's one thing. If you're trying to build like an active business within the real estate world, which we kind of found ourselves in after being in just from being investors, those are a little bit different things. But just as you grow and scale your business, you need to build a team. And it's like at every layer of business that we achieve, it's great because our business is thriving, but then there's more problems. And sometimes those are bigger problems we have to solve and bigger issues. And it often means, building a better team. And a lot of times, like I look at it this way, I forget who I was listening to that mentioned this analogy, but it really resonated with me because as I was at that point in my life and our growth is like, you start as an operator, right? And sometimes we're a sole operator in a lot of ways. But then if you really want to scale your business, regardless of what business you're in, you need to consistently replace yourself. And that's it. That's at every level. To the point where you're more almost like an architect and completely out of the business. Now we're not there quite yet. Because I'm still day to day, but I'm overseeing the team and I'm acting from a visionary standpoint, but we have our team that operates, and we're operating mid-eight figures, now is our active business, and we have a large portfolio separately. And it's always new problems. But in the early stages, I think some of the hardest obstacles to get over is sometimes people don't want to spend money on their business, and you have to spend money. I personally feel that marketing, if you're trying to acquire new clients, new properties, new deals, put your money into marketing. If you're going to put it anywhere, put into marketing. People want to spend money on a fancy website or coaches or things. Just put it into marketing, get deals in the door. Once you start to get consistent flow, make good hires. We used to be, and this has been something that's been so paramount in our business evolution, Jonathan, is that the way I used to hire is so different now than it was previously. I used to hire friends and family and colleagues, and that's okay. Or recommendations from people. And that can be good and that can be okay. But to have really top tier talent and attract those people, you need to have a hiring process in place. And so it's just a numbers game, like trying to find a good real estate deal. It's going through and having a strategic approach. And you also need to appeal to those people, right? You need to attract them so they want to come work for you and you provide an opportunity. Hiring has been key, spending money on marketing. Um, Customer service and reputation is a huge thing. Real estate is a hard place to build a strong reputation in because if you're working with investors, like you're housing people, real estate is an investment. Inevitably, something will go wrong. How you approach those and being solution oriented and tempering your emotions is really been key. That's probably one thing that I would say is a little bit of my superpower that's allowed us to be successful is we've had a lot of issues, right? This is with our own properties, with our investors. We always try to be very professional and solution oriented on solving issues. And when there's a problem, we also don't ignore it. We jump in and get our hands dirty. And that I think speaks volumes about our business. We have a very strong, probably the best reputation in the turnkey space publicly. And that's because, hey, everyone knows issues come up, but it's how you approach those issues. You only have one name in life. You can restart businesses, but just keep that in mind. I think a lot of people early stages in their business career, they get too emotional and things. And it's like, even when shit hits the fan, like you just got to like take a step back and be like, how do we constructively solve this? I mean, Jonathan, I look at real estate investors and entrepreneurs in general, like we're just problem solvers, right? It's all about solving problems because, if there's an undervalued issue, you're trying to do value add deal on a commercial deal or whatever, acquiring distressed properties, dealing with tenants, building business and dealing with customers. It's all about solving problems. And the more creative and intentional you can be on your problem solving skills, I think the more successful you're going to be. So those are, I guess, a few different nuggets I would say early on as we grew that helped us be successful.
What are some of the biggest challenges that rent to retirement is facing right now, either internally, as you build and grow, or if it's deal flow or interest rates, or what are some of the biggest challenges that you're facing right now?
Well, everyone could complain about interest rates.
And they
I
do.
think that they do, right? I may be found to complain about them from time to time, but my opinion is always like, as I mentioned, I've invested every year for the past 15 years, not taking a year off. Interest rates are relevant because they're only a point in time, and this is actually a unique opportunity. I actually think Q1 and Q2 this year is a really unique opportunity to find like acquire deals where there's going to be less competition because there's a lot of people sit on the sidelines just letting interest rates drive their decision. But we've seen slow down in activity, in investor activity to a small degree, but investors are still, they see the opportunity to acquire better deals now with better builder incentives, make more creative deals happen. Those are ultimately the more successful investors, I think, that find ways to be successful. And interest rates are just a point in time, right? I mean, we can always refinance properties in the future. Interest rates could also go up down the line, which, if you get a fixed mortgage, then you'll be thanking yourself that you did something now. I would say the market in general, it's just been a weird market. And we have seen growth every single year, this last year included, just in our overall business. And I think that's just from having a growing community. But we've also seen a stagnation out there, right? Just in deals. We're starting to see deals start to open up a little bit where there's more availability. But for the past 2 years, it's been a little tough to still grow. You've just had to get your hands a little bit dirty and be a little bit more creative, which I think that's what gave us a competitive edge, especially being creative with our financing options, because debt's a little bit more expensive. Even on a personal level, trying to acquire more commercial properties, it's like, for example, I have a commercial retail center that it was on a 5-year note, about in 2019. It's due in December this year. It's a 2.75 interest rate. And it's like, now it's going to be 6, right? And we're forced to, refi. We'll probably just end up paying that one off. But it's like, that's tough. That's tough to swallow because, the cash flow would be impacted. We would have to come to the table with quite a bit of money to then have the same amount of cash flow we receive now. But I don't know. That's one. Other challenges, I would say, it's an election year. There's always something. It's interesting because there's always something, right? There's always something in the news. COVID, everyone was very fearful about COVID and what that means. Lenders shut down on the commercial space for COVID for a while. But look at what happened post COVID, right? It's like, man, you're kicking yourself in the ass if you didn't buy any real estate at all during that period of time, because it probably appreciated at double digit amounts. But there's always something, whether it's politics, war, rates, media, policy changes with NAR. There's always something in the media that's happening. For us, we try to just put our heads down and focus on the fundamentals of investing, and that's served us well for a long period of time. But we're dealing with the same challenges everyone does right now.
Zach, I see you as such a high performer. And this is what I love about doing this podcast is I get to talk to people like you, and I could honestly talk to you for at least another 2 hours. I've got a ton more questions and created even more questions as we were talking. But as we wrap up, I want to dig into sort of how you're such a high performer. I think about you being in the Air Force, being an optometrist, starting to invest out of state, and then building rent to retirement to what it is today. Can you think about any books or mentors that you've consumed or had in the past that have had a dramatic impact on either on you personally or on growing your business?
Yeah, when I look for mentors, and I haven't had a lot of mentors. These are people but the ones that I've learned from are ones that I directly have found, or that I've just learned from through some of their education. I always look for people that are in a higher place than I am, and have created success that I want to achieve. And this could be in business and relationships, fitness, whatever the case is. So I think that's important, to just being conscious who you're taking advice from, because everyone has an opinion, and most of them are probably not worth listening to. But that's served me well. Book recommendations. We're talking a little bit about focusing on like this as a business. Definitely the E-Myth or E-Myth Revisited by Michael Gerber, I think, is an exceptional book to think about, like replacing yourself. One of my all-time real estate books is pretty rudimentary book, but just The Millionaire Real Estate Investor by Gary Keller. It talks about like the 4 stages of millionaires, like thinking like a million, in owning a million, receiving a million, and just like the transition as you grow your portfolio. Obviously, all the Kiyosaki stuff is a great starting point, but most people that have probably read those. But just changing your mindset and thinking about money. I think a lot of early on stages, like people want someone to just tell them what to do, give me what to do, and then and I was the same way. All this mindset stuff was a lot of fluff. I was like, give me the concrete stuff, what I need to do. But now we've achieved more success, and I revisit a lot of the mindset stuff because I constantly need to remind myself. But I would say, as far as like being successful, like it's hard work. It's easy for a lot of people to get on and say, hey, I have X amount of real estate deals now, and look how successful I am, and blah blah. But like, they don't tell you about all the shimes that you have to deal with, right? Like, honestly, at the end of the day, Jonathan, we've just put our nose down, and I have just worked my ass off for 15 years, right? And we've reached different levels of success. We've reached first, okay, replace expenses, and then, all right, replace active income. Oh, increase lifestyle and active income. Create generational wealth, where like we could retire and like not do single thing tomorrow, and our kids and our grandchildren will be fine. But that's just my personality. I wake up early. I'm intentional. I have young kids. I have a 1 and a 3-year-old. Life's busy, and I carve out time for them, but I'm intentional with my time. I wake up early. I grind. I try to focus on the tasks that make the most sense. And also, I'm not scared to take action and lose money, right? Like, so many people are fearful, or they're hesitant. And I have the ready, fire, aim mentality. I always have. Now, yes, that's got me in some situations where maybe I lost money, or didn't, jumped into something too quickly. But it's also served me extremely well, because while everyone else is sitting on the sidelines and analyzing things forever, I'm able to come in and actually take action. So I think that's ultimately what separates out people from that reach a higher level of success, is the people that are intentional in where they spend their time. They're able to make decision making. This is one thing I was reflecting on the other day. It's just like, every day as a business owner and an investor, you need to make a series of decisions. You don't have the time to not make decisions and think about stuff too long. Now you want to make informed decisions, but you got to decide, man. If you like, you can't do this thing where you're wondering like, well, where do we go out to lunch or what do we decide? Like, you got to decide, and then you got to go with it, right? And you got to reap the benefits or the repercussions of that, but you got to make that executive decision. Being able to make clear decisions quickly, I think, has been like one of the most important things that has allowed us to be successful, and that's on a daily basis. But at the end of the day, being able to take action, make decisions quickly, and do that consistently, again and again and again, year after year. Like if you're doing that in real estate and business, you will be successful. There's no question about it, right? Real estate is a path to wealth. You just have to consistently buy it, and it's not all pretty, and there's a lot of bumps in the road. So that would be my words of either encouragement or advice for people on if you're not there to the level of success that you want to achieve, which is individual for each person, then man, you just got to grind it out and just keep doing it and always improve.
Zach, if listeners want to connect with you, learn more about you, or learn more about rent to retirement, where would you like to send people?
We always want to send them to our website, Jonathan. That's where we have our podcast, our YouTube channel. It's a ton of information, a ton of market data, calculators they can use. Our website is renttoretirement.com. That's renttoretirement.com. If you're listening to this in the car, you can text REI to 33777 and get on our email dispo list. And, of course, if you're interested to learn about turnkey investing or some of the markets we operate in and investment opportunities, we'd love to talk to you about those. We don't charge our investors anything. We make our money from building and selling houses, but we also have a lot of free, just ton of information and data to share with you about all things real estate. So check out the website.
Zach, this has been an incredible conversation. I admire all that you've accomplished and what you've built. Thank you so much for joining me today.
Jonathan, it's been an absolute pleasure. Thanks so much for having me on.
Listeners, if you enjoyed this conversation, reach out to either one of us. We love talking about real estate and we would love to connect with you. Thank you so much for listening. We appreciate you. Until next time, take care.